Hello and welcome back to HLS Crypto. My name is Dan. Let me get this out the way. So crypto investors, don't fall for it. Watch this. In this video, we're going to be talking about some of the issues a lot of people have and the mistakes a lot of you will make and how to prevent this from happening by knowing what happens next. Plus, I'll give you a potential portfolio structure that could make crazy gains in the 2025 bull run, which I think is what we're all essentially here for. Right now, crypto is pumping. And it's been pumping for the past 72 hours maybe. And as I've said many times before, this is where you'll need to control those emotions. Like I've made videos about this in the past. I think it's something that's very key, as in it's a lesson for life, as it is in crypto. And right now I'm seeing a lot of FOMO in the crypto space, and that is fine. I'm not a bear at all, but I do believe that we'll see a pullback over the coming weeks or months, in my opinion. I just think it has to happen. I think at some point Bitcoin will run out of steam a little bit. I'm not saying it's going to crash down to like 20K or anything like that. But what I'm suggesting is that there's going to be some sort of a pullback, and the slightest of Bitcoin pullbacks would mean an even bigger pullback for the alts, which I think is important because I am only in alts. I don't hold any Bitcoin, but we'll talk about that in a little while as well. Here is something very interesting. As I watched this happen in real time back in 2021, a lot of us were in a bull market and we didn't even know it. So we were sitting there, and you've probably had this mistake. If you've not been in a bull run before, then this will be interesting for you guys. And if you have been in a bull run before, you'll know exactly what I'm talking about. You'll remember this. So we were in a bull market and we didn't know, because I mean, obviously the people who've been in there for 3 bull markets, they probably understood, but we didn't. A lot of us didn't know what was going on. So this is an interesting graph. So path to the alt season. Okay, so in phase 1, money flows into Bitcoin. So flow of money moves into Bitcoin, causing Bitcoin's price to surge. And then it'll overlap. Then there'll be phase overlaps into the next phase. So money flows in then after the Bitcoin. So money flows into Ethereum, but it struggles to keep up with Bitcoin. Ethereum goes back and forth with Bitcoin, then ultimately starts outperforming it. Phase 2 is your Ethereum phase. So again, money flowing in. Ethereum's outperforming Bitcoin, and we hear talks of the flippening. We heard that last time round, I'm sure you remember. And then phase overlap for that is money is starting to trickle into large caps, where we see large buy-ups happening. So then phase 3, this is all during a bull run. Phase 3 is Ethereum has been outperforming Bitcoin, and large caps are going parabolic, which is then, again, that's another time to make sure you control your emotions and understand what you're doing. So then we'll have the overlap into phase 4. So the overlap would be, regardless of market cap, which is quite key actually, regardless of market cap, some altcoins with strong fundamentals are having pumps. And then phase 4, you move into alt season. Now, this is the season where it's going to be most pertinent, I think, to us, or people who maybe follow this channel, or people who buy a large amount of their portfolio in altcoins. So large caps have now gone full vertical, and we're seeing blow off tops. Mid caps, low caps, and micro caps all tend to pump around the same time. Large caps have been outperforming Bitcoin and Ethereum, and it seems that every coin is going parabolic regardless of fundamentals. Memes are everywhere. Everyone is super excited, and you feel mania in the air. Okay, now this is the most dangerous time in crypto, because at this point, if you've not started taking your profits and getting your profits out of there, this is when your gardener, if you've got a gardener, whatever, your mates down the pub, your hairdresser, whatever it is, the word on the street, everyone's talking about Bitcoin, and it's going crazy. It's all over the news, all over the TV, and then ultimately, poof, absolutely chaotic crash will ensue just after that. So make sure you're out in phase 4, 100%. Now, there's another way of doing this as well. This is compounding gains in the bull run. So this is a different kind of chart. This is from Secrets of Crypto on Twitter. So credit to him for this. So you've got your portfolio of alt bags. So you've built your portfolio of alt bags. One of your altcoin bags pump, and then you take profits, sell to Bitcoin. If it's near the Bitcoin, if it's near the end of the bull market, then it encourages to sell for fiat. But then the other option is to buy another altcoin that hasn't pumped yet. I don't like this method. I think that comes with a bigger element of risk than to just get your profits out on what you've already invested in, DCA'd over a period of time. So the second slide is something I won't be doing. It's a method that some use. It can work if you time it well and you know what you're doing. It isn't a bad method, but it's not something that I want to touch, and I think it carries an element of risk. The method I prefer, and the one I think will do well in the safest way possible, is to DCA into coins that you've already selected. So set your price targets and layer out your bags and get that back into cash so you can begin your new life financially free, which is the ultimate goal for me. And I imagine a lot of people who are watching this video has the same kind of goal and dream as that. Here's an example. Now, this is just an example. It's not my particular portfolio, but it's an example of what you can do, particularly if you're coming into the market late and you might want to have a bit of a spread, a bit more of a mixed appetite, a mixed risk appetite. So it depends how much that you can afford to then risk with some of the slightly lower cap gems and things like that. Now, sometimes this comes down to age as well. Some people who are slightly older might want a slightly more safer route. And then some of the younger ones might be able to have that little bit more of a risk because they've got plenty of time to try and build that back up again. But either way, I don't think age comes into it. I think it's up to yourself. I think everyone's risk tolerance is very different. But as an example, this is just an example. So if you've got a 10K portfolio or you've got 10K to come into the market with, then 3K into quant, that'll get you a nice 10 to 12x, in my opinion. Definitely a 10x. I think it's definitely going to hit $1,000 per quant. 2K into Casper, still got potential for a 50 to 100x there. 2K into Trias, I still believe that's a 50x. I think it's definitely, minimum of $100 a coin, which I've mentioned before. There's also videos on all of these coins on the channel. Feel free to flick back, check through them, have a bit more of a deeper dive, see what you think of them particular projects. You might have other projects that you want to use. That's absolutely fine. You can still structure it very similarly. HBAR, 1K into that's your 20x. And then you could split 4 $500 bags into Hello, Myria, PlayZap, GFL, all got the potential there for 100x. Maybe even PlayZap and Myria have even higher potential to maybe go 1 to 300x and things like that. So you don't have to do this way. You don't have to have this level of risk. You could even take out 2 of your $500 splits and put more into quant. If you want to be safer, you might not like quant. You might want to go for something else. You might have Solana bags. You might have whatever it is that you want to do. Just structure it in a way. And if you notice with this portfolio as well, you've had quant, Trias, HBAR. They've all had a bull run before. Then you've got like Casper, Hello, Myria, PlayZap, and GFL haven't. So then you've got that kind of balance. You've got a few gaming coins. You've got a few other coins. You've got some few finance coins. There's different structures to that particular portfolio. Again, though, you don't have to follow that exactly. You don't have to follow any of this. You can just do whatever you wish to do and choose whatever allocation that you want. That's if you come into the market with 10K. You might have been DCAing all the way through, which is what I've been recommending to do for a long time. And I suggest that anyone does is DCA in, and always stay as spread as possible. This is not massively spread, but it's got a nice element of risk to reward. In my opinion, I think it's a decent little portfolio that if you had one. For different risk appetites, you can play around this to be more safe or risky. So, as I've said before, you might think that Ethereum and Bitcoin, you might put Bitcoin in there. You might put Ethereum in there. The reason I don't is because, excuse me, your potential X's are just not as big. Bitcoin is your safest play. Ethereum is your second safest play. That's just how it is. They've been around a lot longer. They're battle tested, but it still doesn't make that much sense to me to have that many X's or that little of an X. I want a bigger X overall. So ultimately, if 1 or 2 of my coins go to 0, hopefully there's enough in my other coins to go and do 50 X's and things like that. I mean, a 10X, the way you're looking at crypto these days, or the way you should really look at it, is for every dollar you get invested in there, think of it as 10. For every 10 you get invested in, think of it as 100. And for every 100 you get in there, think of it as 1,000. Because your minimum you want to be looking for is a 10x. That's the very bare minimum. And anything above that is obviously great. But 10x's are still really good, like a 10x. You don't get that in the stock market in this short space of time. Let's have a look at the catalyst historically for the start of the bull run. Well, that's this. So your Bitcoin halving countdown, 150 days away. A lot of people are unaware of what the Bitcoin halving event is. So block halving events happen every 4 years or 210,000 blocks on Bitcoin's blockchain. Bitcoin's initial block reward was 50 Bitcoin. The current block reward is 6.25 Bitcoin, and the next block reward will be 3.125 Bitcoin. This lowers the rate at which Bitcoins are generated. The halving is periodical and programmed in to Bitcoin's code. Why was this done? Conventional fiat currencies allow governments or banks to print money and cause inflation. In Bitcoin's case, the total supply will be maxed out at 21 million Bitcoin. Printing extra money causes inflation. If there's no extra money printed, the value of Bitcoin should increase as the demand will rise. More people tend to start using Bitcoin, and supply will lower or stay flat. No more Bitcoins are printed. This means Bitcoin, similar to gold, which has limited supply and cannot be printed or artificially created. So I've said before now, there's 148 days to go. That's changed since we actually come on here. So that's interesting. So it's getting closer. So your time is even more limited. Another thing I want to discuss with you as well is this. So as we spoke about that chart before, about how the flow of money and things like that go into Bitcoin and other areas, how these bull runs work. I mean, see that little small bit there, that was a bull run. You know, it's mad to believe that. This was another one. Here's the other one. Here's the last one. So as you can see, they're getting bigger each time. And we're very, very close now, or we're coming to the point where we're getting closer to the 2025 bull run, and it's going to be epic. I think it'll be the biggest one yet, and I think it's really key to make sure that everyone is in and secure now. If you look at Ethereum, again, this follows a very similar pattern. Bull run, building up again to the next bull run. So Bitcoin, Ethereum, very safe. Quant, again, as I said before, had a bull run previously. Weird thing about Quant is Quant's all-time high was actually September 2021. So again, nothing. Big spikes. It's doing quite well in the bear market, to be fair to it. And again, I expect that to then shoot up again even higher, because I think that this is cyclical and it works on a cycle, and we're now getting more and more aware of it. So as you can see, that time is running out, but that reminds me of a quote, and it's quite a good quote actually. The best time to plant a tree was yesterday, and the second best time is right now. And that's true, because it doesn't have to just be in any, like, that's in life. So if the best thing to start doing a new skill or learn a new skill would have been yesterday, but the second best time to do it is now. Same way as investing into cryptocurrency, the best time would have been to do it 8-12 months ago and continue to DCA in. But that time's gone. Yesterday's gone. Tomorrow isn't. Today's right here. So you have these opportunities, and I do wish everyone on this channel, I wish everyone in general who's in crypto to do really, really well and make their life-changing gains, because it's the most important thing. It's why we're all here. It's what the channel's for. It's what everything's culminating towards. So if you enjoyed this video, please smash the like button. I really do appreciate when you guys do that. Subscribe to the channel if you can. And wherever you are in the world, whatever you're doing, have a great day, have a great evening. And as always, we'll see you tomorrow. Take it easy. Goodbye.